All right, thanks, Pat. I appreciate you being here with us today. Pat Soldano, President of the Family Enterprise USA Group out of DC. Although you're joining us from the West Coast today, and Pat, I'll let you maybe introduce yourself a little bit more, but it's interesting that you mentioned that you were running a family office in the Chicagoland area for a while and then started a multifamily. So you have a lot of experience in family business, of course, and especially some of the issues that they face. And so I just wanted to say thanks for joining us this afternoon now and talking through some of the survey results from what you guys have been up to. And I'll let you introduce more of that as you go. But thanks for joining us today.
Yeah, you're welcome, Dan. Thanks so much for having me. Appreciate it. And I don't want to spend a lot of time on my background. I want to spend more time on Family Enterprise USA. But just to clarify, while I started in the family office industry working for Ted Field, Marshall Field's brother, it wasn't in Chicago. Fortunately for me, I guess he actually lived in Southern California, which is where I live. So I spent 8 years working for Ted, and then I formed my own multifamily office, which I later sold to GenSpring. But what's most important is during that time, I've been working in Washington, D.C., advocating for family businesses, family offices, and successful individuals in this country. And I think it's a really important job. So Family Enterprise USA is a 501c3 organization. And on the call today is John Gugliana. John, you can put your contact information in the chat. If anyone has any questions about what we do, how we do it, John is your go-to. He's been amazing for the organization. So Family Enterprise USA, sole mission and purpose is very simple. It's just to promote generationally owned family businesses and their lifetime of savings. We represent all sizes of business and all industries. So while people might think we're like a trade association, we represent all industries, and we work more on the issues that affect the families of those businesses as opposed to the business issues themselves, which the trade associations tend to focus on. So I know we're a little pressed for time today, so I'm going to go through a lot of slides quickly. Squire, Patton Boggs, and Brownstein are two of the firms that represent us in DC, but they also put their money where their mouth is, and they are platinum sponsors of the survey and Family Enterprise USA. These are the family business centers that actually helped us distribute this survey this year. Hopefully next year, University of Northern Iowa will be on this list. It's really important that the survey gets distributed so that we can get enough respondents that members of Congress think that we are important and the information has credibility. In addition to that, American Trucking Associations and the American Farm Bureau at a national level distributed the survey, as well as the California Association of Grape Growers. So family business is big business. And if you don't know, you should know that there are 32.4 million family businesses in America. They generate 83 million jobs. They generate 59% of the workforce and 54% of the GDP, or $7.7 trillion. That's why members of Congress want to hear from you, need to hear from you, and why you're important. We developed this data, took us about 7 months with 7 professors, because members of Congress were asking us, why are family businesses important? Why do we care? What is their economic impact in this country? And now you know, you are really, really important. And in fact, 87% of the businesses in America are family-owned businesses. So let's talk about the survey. I know we're a little short on time in that you want to spend about 30 minutes on the survey and 15 minutes with questions. So I'll attempt to honor that and get through this kind of as quickly as I can. 571 respondents to the survey in 42 states. This is twice as many as we had in the prior year in half the amount of time. So once again, the family business centers have been helping us a lot in distributing these results, as well as we've been building the organization's visibility, both in Washington, D.C. and a national level. And a lot of these respondents were due to both of those things. So in terms of who answered the survey, 84% are sole or majority owners. That's typically who we want to have answer the survey. And 92% of them are either CEOs or senior management, chairman of the board, or owners. So again, we want the people that are the decision makers in the organization answering this survey. The industries, this is probably a surprise to most people, especially in Iowa. Only 5% of family businesses in America, according to this survey, are agriculture. 26% are manufacturing. So while family farms are very important in this country, always have, always will be, manufacturing is just as important, and they have the same illiquid nature of their assets that family farms do. And sometimes that's lost on members of Congress. Family farms are is the industry and the organizations that Congress people ask me the most about. So I have to remind them that there are other industries in this country that have those same illiquid asset nature of their business. In terms of the ownership, 68% of those respondents are in generation 1 or 2. And in terms of the management, 60% are active in the business, generation 1 and 2. They've been in business, 74% of them have been in business 30 years or more. Again, this is an important statistic for members of Congress because we know that family businesses plan their business as a legacy, not only for themselves and their family, but for their employees and for their community. And in fact, you can see from the graph, 37% of them have been in business 50 to 100 years. So let's talk about the next generation and passing that business on to the next generation, which family businesses continue to struggle with. 86% of them believe that passing the business on is important for the sustainability of their business. And in fact, 79% say it is a family legacy. Yet they're still challenged with passing on the ownership. Much better this year in 2023, as you can see, 66% have passed on some form of ownership. That's a 29% increase from last year. So they are headed in the right direction. We're very excited about that. We suspect that the expiration of the estate tax exemption, being at an all-time high of $13 million, has helped encourage them to do that, because that $13 million level is going to expire at the end of 2025. And no one's really sure where it's going to be, but it could be as low as $3 to $5 million. How have they passed it on? Well, the disappointing news is only 30%, 34% have passed on full or controlling ownership. So while they are passing on ownership, they're still struggling to pass on that control. And we all know why that is. All generations 1 in particular struggle with passing on to the next generation. Maybe they tell me that it's not time, the next gen is not ready, the industry is not in a good place, the market's timing isn't good. There's lots of reasons, but I really hope that the family business centers around this country are helping family business owners to do that, because if they don't pass the ownership on, they're not going to be able to sustain themselves. So 53% use gift to pass ownership, 26% sale. Now let's talk about the revenues and employees and how family businesses affect and contribute to their community. Well, in terms of the number of employees, you can see that 49% are 1 to 50. So they seem to be a little more on the smaller size, but in fact, 34% have more than 100 employees. So the family businesses that typically respond to this survey are the medium to larger size businesses. And, you know, we believe that's the case because they understand the need for this survey is all about advocating for them at a national level in Washington, D.C. And we need them, and they typically understand that when they're multi-generational, and they're at a size when they understand how important legislation is and how it's going to affect their businesses. This is a great question we've never asked before, but we had a suspicion that there are a lot of generational employees, meaning more than one generation of a family actually works in the business. And here you can see 72% of family businesses have generational employees. So not only is this business important as a legacy to the family and the community, it's critically important to these employees. In terms of adding jobs, 61% added jobs, 91% actually kept or added jobs. And of those that added jobs, 88% were 1 to 50 jobs. But in fact, 94% added 1 to 500 jobs. Of those that lost jobs, 90% again was at the smaller scale. when we talk about the salaries and benefits for family businesses, it's a really important statistic to mention to members of Congress that once again, family businesses support their employees. 46% of them pay above average in terms of wages and benefits. So they know to keep their employees, they need to do that. The gross revenue, I already mentioned that most of these businesses tend to be on the medium to large size. What you should understand here is 39%, as you can see right above the title, have 20 million or more in revenue. And in fact, 23% have over 50 million in revenue. 71% actually grew their business in 2022. And they grew by 52%, grew by 11 or more percent. If they declined, that 57% of them that did decline, they declined by less than 10%. And the reasons that they grew or declined, these are kind of interchangeable year after year, but this year it's strategic choices that they made, and then the economic conditions, and then the industry conditions. But going forward, 65% of them expect their business to grow in 2023. And I should have mentioned this survey was taking January 5th of 2023 through February 9th of 2023. So early on in the year, we were still in the pandemic to some extent. So only 18% said they thought that there would be a decline in their business. Impediment to growth going forward in 2023 and 2024. Cost and availability of labor, and that was even more so at the beginning of this year when we did this survey, that as time goes on, but still a very, very important issue for family business owners. 30% market conditions, and then inflation, which didn't used to even be on the chart. Again, another really important statistic. Members of Congress don't connect the dots. When a family business has to be sold to pay the estate tax or for some other reason, not only does the family lose its livelihood, the employees lose their job, but this local community giving goes away. 82% of giving is local. Family businesses donate to a local charity or a local charity of a national organization. So they're very, very important to the community that they support. What are their critical tax and economic issues? Once again, income tax is at the top of the list, higher than last year, it's 50%. Then estate tax is important because we all know that only families pay an estate tax, corporations don't pay an estate tax, and then payroll tax. In terms of the estate tax, what they'd like to see is what I mentioned just a little while ago, is this current exemption at an all-time high of 13 million per person, 26 million per couple. They'd like to see that made permanent. And then second, they'd like to see the tax repealed, which quite frankly, in this political and economic environment is not that likely with our deficit where it is. And then they'd like to see the rate reduced from 40% to 20%. We think that's achievable. And in fact, through Policy and Taxation Group, we've helped members of Congress introduce legislation that does that. If you get the estate tax down to 20%, then whether you sell your business or you die, you're paying the same rate of tax. And once it gets down to 20%, it's going to be much easier to get it ultimately eliminated. So for those people that don't know, the estate tax generates less than 1% of revenue. So it's not a significant revenue number in the scope of things. The top economic priority is income tax once again. Then second is estate tax, but third is simplification of the tax code. I believe that's there because family businesses have to deal every day with changes in regulation, and that includes the tax code. It seems like it's just an unending, process. So that's never been that high on the list in terms of the economic priority, and now it's third. This, again, an important statistic we never knew before. We wanted Congress to understand how important legislation like 199A is to family businesses. And to do that, we needed to tell them how many family businesses operate as a pass-through entity. Well, 80% of family businesses operate as a pass-through entity. That means they're an LLC or an LP or an S Corp, not a C Corp. As you can see, only 20% of family businesses operate as a C Corp. Well, in the last tax bill, the Trump tax bill, C Corps now get to pay 21% in taxes. Pass-through entities are still paying 37% plus state tax in taxes, because pass-through means that their income flows through to their individual tax return. So these S Corps, LLCs, and LPs are paying the high rate of income tax. Most members of Congress don't really understand that. And in terms of the minority ownership in businesses, we've asked this question 2 years in a row. Hasn't really changed. Kind of disappointed that we don't have more minority-owned businesses. As you can see, women own 22%, Asian American, and then Hispanic and African American. Inflation, again, first time we asked this, 74% of businesses were affected by inflation, meaning it reduced their profitability. And 58% were impacted by environmental concerns. 86% affected by supply chain issues. Most of the family businesses tend to be multi-state. As you can see, 25% of them operate in 21 or more states. And in fact, 32% operate in 2 to 5 states. So now with the time I have left, I want to talk quickly about the Congressional Family Business Caucus. I know that John Guglielmo has probably talked to you about this. He's talking to everybody about it. It's very, very important. There, until we brought it up, Family Enterprise USA brought it up, there was no Congressional Family Business Caucus. There's over 300 caucuses in Congress, but there is no Family Business Caucus. There is one now. We helped Congress to form it. It is their caucus. Its purpose is to educate members of Congress on what family businesses are and what they aren't. We learned that they have really no clue. They don't understand you. Every time I say family business, they say small business. And yes, family businesses are small, but they're also medium and large from all industries. It's not a policy caucus. It's not going to take positions on legislation. And most importantly, it is a bipartisan caucus. We work really hard as an organization to stay bipartisan. We were formed as bipartisan organization. Both organizations that I run and represent are bipartisan organizations. We work with both sides of the aisle. That's very, very important. This just talks about some of the goals that we hope to achieve and the activities. We have 3 caucus meetings a year. We've already had 2. The next one is September 20th. We hope to release our annual family business report from the caucus, which hopefully you can help us with. We are going to have an event, a caucus meeting. Members of Congress will be coming to that. And to that point, these are our co-chairs. So as you can see, we have 2 Democrats and 2 Republicans in the House, Jody Arrington of Texas and Henry Cuellar, the Democrat from Texas. We have Brad Schneider, who's been amazing, from Illinois, who's a Democrat, and Claudia Tenney, who's also been exceptional Republican from New York, and they all work together well. In the Senate, we currently have Susan Collins, who has said she would be the Republican co-chair, and we're talking to other members, Democrat members, about being the Democrat co-chair in the Senate. So we're very excited about this caucus. These are the current members. We just added some more this week. So we have almost close to 20 members. We hope to have a lot more. As you can see in the fine print on the bottom, we've had about 100 members of Congress that we know are from family businesses, and we have 100 or so that express interest, some from family businesses, some not, in joining the caucus. And while it seems like an easy ask because it's bipartisan, it's only educational, it's not political, it's not policy, it's been a lift. I mean, it's been a heavy lift because members of Congress want to talk about it, think about it. And I will say, I don't think they're the leaders that they used to be a decade ago. I think that they are concerned, always concerned about doing anything, because if they do something, they tend to get criticized. So we usually have to reach out 4, 5, 6 times with members of Congress just to get them to join this caucus. So if you've been on our website and you've responded to our call to action and you've asked your member of Congress to sign on, please follow up with them. Please ask them again. You can't ask enough times. We just really, it does take a village to make this all happen. So I already mentioned the next caucus event is September 20th in Washington, D.C. If there are family business owners that are interested, please contact John Gugliana. We pick about a half a dozen family business owners to come and tell their story. We think that's very, very powerful. That's what we're doing this caucus for. While it's Congress's caucus, we're in the background. We run it. We fund if there's any luncheon or anything required. And so again, if you're interested in telling your family business story, please reach out to John, who put his information in the chat. And this is how a member will form. I know this is hard to see, will join a caucus. There's a dear colleague letter that's been sent around to all members of Congress from the co-chairs. It's going to be resent around. And all they have to do is contact somebody on this one of the co-chairs by email or phone or whatever and say, I'm in. I want to be a member. And that can be done by their staff. So I know I rushed through that because I want to respect everybody's time, but I'm happy to take any questions. I see we may have questions in the chat.
Yeah, thank you so much, Pat, for that. That was awesome. And as we get started here, I'll go from the most recent question backwards. With all the statistics regarding taxes, inflation, and other issues, have there been family businesses that have left Iowa, or I guess if you're looking nationally, like other states, and hope for more success in another state? And where are people going? Where are businesses going?
Well, we don't work on state issues, but we happen to know that there's probably, and as it relates to the estate tax, I think, which is why most people are moving, or income tax. There are about 13 states that still have an estate tax or an inheritance tax or both. I would not move to the state of Washington. They are trying to increase their estate tax from 14, which is already the highest in the nation, to 40. So that means you'll pay a 40% federal tax and a 40% state estate tax, and you don't get a deduction. I mean, you don't get a credit like you used to do, which is crazy. I don't know if it's going to pass, but that's what they've been trying to do. So there are states, and you can look at our website. We have a list of those states and what the rates are that have an estate tax. I believe that people are moving out of states. I live in California, and I can tell you that people are moving out of California because we now have the highest income tax rate of any state in the country, including New York, and our governor is trying to increase it. It still keeps me here, so I don't know, but there are income tax rates, property tax rates, estate tax rates. I think those are all what is forcing people to move to other states. What I caution everybody against is when you consider the tax consequences of a residency in a state, make sure you consider the total tax burden. So if you Google total tax burden of states, that's what you want to know. Because example is, you may move to Texas that doesn't have an income tax, but they have an incredibly high property tax. So you want to make sure that you may not be paying income tax, but you may be paying a high sales tax or some other tax. So what you want to know is the total tax burden. So make sure you look that up before you move to another state.
Okay, thank you. Thank you. That's really good. Really interesting to think about the future of that. And kind of along those lines, I know you mentioned estate tax exemptions. Can you just reiterate, maybe how low you think those will go and when they might?
Yeah, well, the exemption, as I mentioned, expires at the end of 25. So right now, nobody knows. Nobody's crystal ball is telling them the answer. But I believe that it's not going to stay at 13 million. That's an all-time high. When I started working in Washington, D.C., the exemption was $625,000. And now it's 13 million. And that was a huge jump. So first of all, do your planning, and then be prepared if you haven't done your planning that you may not have that to work with. It could go down as low as 5. I don't think it's going to go lower than that, but it's possible. And I think the rate, unless we are successful with our rate reduction legislation, which hasn't gotten the kind of traction we'd like it to get, I think the rate's going to stay where it is. So I think, it's a heavy lift. Really depends on a lot of issues. But estate tax legislation has changed the last 3 times. Was in December of the end of a session. That's when it always happens. That's when they finally get to around of negotiating and making deals. And the estate tax seems to be one of those things that's usually included in a deal. So I think anything's possible.
And I have a texting question here. What issues do you have? What issues do you see having movement in 2024?
I think 2024 is going to be the same thing as 2023. We're playing a lot of defense. This is not a political statement, but President Biden has said that he wants to tax more, and and Secretary Yellen has said she wants to eliminate valuation discounts for family-related entities. She said that over and over again. That's very concerning to our families many of them use valuation discounts. President Biden has said he wants to apply a surtax on people making over $10 million or $5 million. And while that's a lot of money, if you have a trust, those thresholds are only 300,000 or 500,000. That's crazy. If you own a family business and you own it in a trust and you make more than $300,000, you're going to pay another 3% on your already high income tax. And if you make 500,000, you're going to pay another 5% on your income tax. So we, in this Build Back Better Act that was last session of Congress, which is being resurrected again, we are very worried about those kind of provisions. Not being able to hold your private stock in an IRA. You literally have to distribute it, pay a tax, and not hold it in your IRA anymore. And some family businesses do hold their stock in an IRA. Nuances in that legislation that most people didn't know or realize. There were actually 10 provisions that we fought against. 6 were taken out of the House bill, went on to the Senate. The final 4 were taken out of the Senate bill. But most of these things people are not that aware of. And so I am worried that the same things that were included in the Build Back Better Act are going to resonate again. They're already starting to resonate. And then finally, I would say the wealth tax. Unfortunately, most people, it's not popular to be wealthy in this country anymore. And a family business is perceived. You should know, we've done the voter surveys, the polling. We use Frank Luntz to do that. They view family businesses as wealthy. And 70% of the voters believe in a wealth tax. So we are concerned about that. And there are members of Congress, Senator Warren, Senator Bernie Sanders, Senator Wyden, who've all introduced wealth tax legislation. So we're watching that very carefully. We're trying to explain to members of Congress what that impact a wealth tax would have on a family business. Because think about it, they're going to include your business as wealth. And you're going to pay, in the case of Senator Wyden's legislation, you're going to pay a tax on unrealized gains of your business every single year. That means you'd have to have your business valued, which costs money, and then you pay a tax on that appreciation every year. We think that makes no sense. We think that most people agree with us and don't necessarily support Senator Wyden's proposal, and that's on both sides of the aisle. So those are the things we're worried about.
Okay, thank you. And I mean, definitely we'll be on the lookout for those things too here as we get toward the middle and then end of the year. How should we approach our federal representation to join the Family Business Caucus?
Well, Dan, thanks so much for that question, because it is really, really important. What you really need to do is you really need to contact your member of Congress. You can call them, you can go on our website and sign up the CTA. The best thing to do is to go in person if you can to their office, get a meeting with them. If you're a constituent, they want to hear what you have to say. People think that money drives politics, and while money is important, votes are more important. They want to hear what you have to say. If you have a business and you have employees, ask your member of Congress to come to your business. They want to see voters, constituents. They will come. And then you say to them, listen, explain the caucus, explain that it's bipartisan, explain that it's educational and it's not a policy caucus, and ask them to join. And be wary, because they may say to you, that member of Congress, yes, sounds great, I'm in, count me in. But then his name never gets on the list. We've had members tell us that 9 months ago, and they're still not on the list because they either went back and told their staffer, no, I don't really want to do this, or their staffer has just not done the job and followed up, or a multitude of things. So you really need to keep hounding them until they're actually on the list. And I would say, if you've got a Democrat member of Congress, contact Snyder's office. Ethan in Snyder's office in DC is the person that's critical. He's been absolutely on it. And in Arrington's office, it's Mimi. who's the person in that office. And so if you can literally call the office and ask for Mimi in Representative Arrington's office from Texas, or call Brad Schneider of Illinois' office and ask for Ethan, that's one way to do it. But the best way is to talk to them personally. And what happens is sometimes there are members of Congress that say, I don't join caucuses. I make it a policy of not joining caucuses. Okay, we get that. So that's a no. So we put them on the no list. Or I don't have time for another caucus. And so I'll give you an example. I'm in Southern California. My member of Congress, is Young Kim. Young Kim is amazing. Young Kim literally told me, I don't have time for another caucus. And Michelle Steele told me, who's the other member of Congress here locally, I don't want to be part of this caucus because I want it to be a policy caucus, which most people don't. So some of them have reasons, some of them more often than not, as John Gugliano knows, because he's been working on this a lot. They just don't give us an answer. And so you have to nag them and nag them and nag them. And you family business owners are the best people to do it. So sorry for the long answer, but thank you for the question.
Oh, that's great. And good reminders that, we all have voices and can get involved. Are there any other questions that you both have been asked in the past, or things that you think should be brought up that we have not touched on yet today?
I don't think so. John, do you have any comments?
No, I mean, as usual, your presentations cover a lot of ground, so there's always a lot of space there. But no, again, as Pat said, please, get in touch locally. I travel to a lot of the regional offices when I do my travel. I try to connect with the regional directors in your communities. Anything you can do to kind of push the process along, we appreciate. As Pat said, it is a few, if not more, phone calls and reaching out to try to get folks to join. So it does take quite a bit of effort, and we appreciate any help we can get.
Yeah, and I would add to that, they do care and they do listen and they do want to hear from you. So don't think, gee, my legislator's not going to pay attention to me. I mean, sometimes you send them a letter and you may get the standard letter back. We just had that happen to a member of ours that was very frustrated. But we're going to follow up with that member of Congress and say, hey, all you did was send a letter, your boilerplate letter. You didn't even address his issue. That's not acceptable. So, don't get discouraged. Again, they really want to hear from you. And oh, by the way, they need to hear from you over and over again. If I meet with members of Congress and I talk about a specific issue that affects family businesses, and they haven't heard from it in a while, they literally will say to me, well, nobody's brought that up to me in the last 3 or 4 months, so I didn't think it was an issue anymore. So it's not a one-time thing. I mean, you need to be, that's why we're here. That's why we have, 10 people in Washington, D.C. working this every day. They need to hear from us all the time. And while the people in DC are very good and very helpful, and most of them are ex-Hill staffers, so they're senior people, they have good relationships, they're going to listen to family business owners much more than they are the people in Washington, DC. You guys are really the voters, and you are the people on the ground dealing with the issues. So as part of this caucus, one of the things that we are doing is developing advisory boards for these members of Congress. Or advisory councils. They're going to be, or kitchen cabinet, whatever we're going to call it. But we're literally going to go to their districts, like Brad Schneider's district. And we're going to say, we're going to round up family business owners that can help you with family business issues and be an advisor for you around family business issues. I think that's a great role. It's really a great resource for the member of Congress. And I think it's a great role for family business owners. And I would hope that they would really want to do that, to be able to voice your opinion and have, regular communication with a member of Congress and give them advice. And they really want that, would be helpful.
Okay, I have one more text-in question. How likely is it that there would be a removal of family business valuation exemptions like minority discounts and other techniques used to pass on the family business?
Well, I'm very concerned about that because, You don't need Congress to do that. Treasury can do that on their own. All they do is change regulation. And this has happened before. Less than 10 years ago, I was part of it. The Treasury puts out a proposal to eliminate valuation discounts for family-owned related entities, which means family businesses and a lot of other entities. Family related, which is a very broad term, which to me means you're just picking on families, which makes no sense. But here nor there, it was popular with the current Treasury. The process is that they must propose it, and then they must have public opinion period of 90 days. They got so much backlash online. Millions of people went online. I think at one point broke their website. We actually went to DC. We brought family business owners. We went to the hearing. The room was so full, people had to stand out in the hallway. And so the only reason that it went away then, we believe, is because of that backlash. There was very few people in support of it, very few people on the other side. And I think there's only one person at the hearing that testified. So I believe it can absolutely happen again. And again, because Congress doesn't need to be involved. Treasury can do it on their own. And as I just said, Secretary Yellen has said she does not support valuation discounts for family-related entities. Don't ask me why, but she doesn't. So again, do your planning. If you haven't done your planning, take advantage of that. It can always happen.
All right. Well, I think that's it for our questions. Thank you so much, Pat. Thank you, John, for being here today. Everybody listening, we will be sending out a recording of this session so you can watch it again over and over when you need to know some information. And hopefully we'll be in touch for the next survey and next reporting. Thank you so much.
Thank you. Appreciate the
Okay,
opportunity.
thank you.
Take care.
Bye, everyone.
Bye now.
Bye-bye.